Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we have a fun episode to go over. What we're going over is if I could only invest in 5 stocks for the rest of my life out of my portfolio or just in the stock market in general, what 5 stocks would I sell? And this is going to be a fun and interesting little project because I have 26 companies in my portfolio, and a lot of these companies I already intend to hold till the day I die. But that said, if I could only choose 5, a lot of different strategies and a lot of different factors come into play. And I think it's really interesting to think about this for the long term and what 5 companies I would pick because I have to think about sector diversification, industries that'll be around for at least the next 50 years. I have to think about dividend track record, dividend growth, the company as a whole. It's a lot to go over, it's a lot to think about, and I had a lot of fun making this list. And so before we get started, before we jump into the 5 companies, if you're new to my channel, go ahead and subscribe. I'd invite you to do so. This is going to be a fun one, and you can watch me update these charts in the very next video. So right now, when this video came out, it is on a Wednesday. On Friday, 2 days from now, we will be coming out with an update on these 4 charts, which are my monthly income, my annual dividend income, my portfolio value, as well as my monthly YouTube income. So we're going to go over all of that, and we had 2 more people sign up this morning for M1 Finance. So if you see the brokerage that I'm using right now and you're interested in using it, go ahead and use this link that is down in the description, and we have 58 people signed up now. So if you sign up and deposit $100 to the platform, you get $10 just for signing up, and as well as a lot of other things like mentoring calls, Yada savings accounts, and as well as some other things as well, including the link to my pie that I currently invest in with my 26 companies. But it's going to be a fun one. Let's go ahead and jump into it. And the number 1 stock that I would hold until the day that I die is Pepsi. Pepsi is defensive. Pepsi is a very defensive company in pretty much all markets. And let's go ahead and look at Pepsi. Pepsi is currently $145 a share with about a 2.7% dividend yield with a great dividend track record, a great growth story on both the beverage and snack food industry. And this is a company that is not only defensive and has a great track record, but this is a business that will always be around. This company will always be in business. Now, instead of going one by one and just naming off all the brands, I'll just scroll through and you can look at them yourself. And if you want to pause the video, you can. But let's look at all the different beverage brands that they have, as well as their snack foods. So right now as I scroll, these are all their different beverage brands. And what's really interesting is that if we go to their snack food brands, there is way more from Lay's and Doritos and Tostitos and Cheetos and Fritos and Life and Matador Jerky and Funyuns and so many other brands that you probably see and buy every single day. So basically with their wide array of products, and they're constantly buying out other companies as well. Just to give you an example, they also just extended some of the beverages that they have to offer through SodaStream right here, and then they also just bought out Rockstar Energy. So this company is constantly looking for ways to increase revenues, increase profits, and constantly adapt to the ever-changing consumer trends. But this is the company that I 100% will be owning till the day that I die. When I was making this list, I thought about saying Coca-Cola and Pepsi, but you got to think about sector diversification. I own both of them, I will own both of them, but if I could only own 5 stocks, I would go with Pepsi because in my opinion, it's just the better investment. And plus, not to mention, I got that big bias towards Mountain Dew, so props to them. But next up, we have the second stock on the list, and this is a company that is just, it's one of my favorites. As you can tell, a lot of my core holdings are a lot of these companies that I really like a lot. These companies that I plan on holding till the day that I die. The second one is Johnson & Johnson. So let's go ahead and close out this Pepsi tab here, and let's go ahead and open up this little snapshot about some information about Johnson & Johnson. I've showed this on the channel before, and this is just to give you an idea of how successful this company really is. They have 36 consecutive years, 36 years of consecutive growth in earnings growth, and then 58 years of consecutive dividend increases. The 10-year total return has been an average compounded rate of 11.8%. And then of all these 5 little categories right here, these 5 little tabs, these little bullet points for investors to look at, this fourth one, this one that I'm trying to highlight right here, is by far and away, in my opinion, the most important. Roughly 25% of sales have come from products launched in the last 5 years. So it would be really great if this was a one-trick pony, if it just made 1 or 2 really cool products that just took off and they continue to get revenue from them. No, they are constantly coming out with new products, buying out smaller pharmaceutical companies, new medical equipment, new brands of whatever. As you can see, this is some of their top brands right here down below, like Tylenol, Listerine, Neutrogena, Johnson's Baby. They have so many different huge brands out there that you see and buy every single day. And what's cool about buying Johnson & Johnson is that when it comes to the healthcare industry, this is one of the most diversified companies that you can probably find out there in the world. They own things from $100,000 medical equipment all the way down to Star Wars Band-Aids is the funny example I always like to give. You can see Listerine, that's just basic mouthwash. Tylenol, that's just over-the-counter medicine. But they also have extremely expensive pharmaceutical equipment and pharmaceutical products, and this company is diversified between all factors of healthcare. So when you're buying this company, it's like buying a healthcare ETF. This company, like we've shown from this little bullet point here, with a 36 years of consecutive earnings growth and 58 years of dividend increases, the track record can't get much better than that. 58 years of consecutive dividend increases, you're not going to find many companies that will beat that. And then last but not least, some form of healthcare will always be needed. So I know there's a big question mark out there about what governments are wanting to do with their healthcare system. Maybe they're going to make some kind of social healthcare system, or maybe it's public funded. I don't know, I don't care, and I'm not even going to try to make any predictions about that because guess what? I have no clue what's going to happen with that. But here's what I can tell you. No matter what happens, no matter what comes about with the industry, with the healthcare sector, I know that some form of healthcare will always be needed, and especially be needed from Johnson & Johnson. And if you want to see a breakdown of their sales by segment, they have roughly 13.9% coming from consumer health, 26% coming from medical devices, and then about 42% from pharmaceutical. And this is a highly diversified company, great track record, and a business model that will always be needed. And just in my opinion, they are by far the best healthcare company out there. So that moves us to stock number 3. Let's go ahead and close out this tab and move to stock number 3. And it is one of my favorites. It is my second largest holding in my portfolio. I will definitely never be selling a share of Realty Income, and that is our third stock. And there's a couple reasons why I absolutely love this company. And as far as guaranteeing long-term returns, I know that there's no guaranteed returns in the stock market, but this is the closest thing you could probably come to when it comes to talking about guaranteed returns in the stock market. And the reason that is because you're looking at monthly income, receiving a check every 30 days just for owning this company, not counting your share price gains. So when we look at this company, Realty Income is a stock that has an incredible track record with great growth, and it has went from about $50 a share 5 years ago, and now it's up in the 60s, and that is with a growing monthly dividend every single year and a 4.5% dividend yield, the highest on this list. And not only does it have monthly income and a very high dividend yield, but the dividend raises is something that is very unique. When we go through this list and we look at the 5 stocks, all these companies raise their dividend once a year, and even some of them have had to cut their dividends in the last 10 or 20 years. But Realty Income, not only have they maintained an incredible track record, 30-day payments, and an incredibly high yield, they also raise their dividend a minimum. Keyword there is a minimum of 4 times a year. Sometimes they raise it more than 4 times a year. This year in 2020, they're on track to raise it, I believe, 5 times already. So that is something that is very unique to Realty Income, and you can't name any other company with a great track record out there that has been able to do that like Realty Income has. As we scroll over to their investor relations page, let's just look at some of these bullet points. A compounded average annual return since the company has went public of 15%, over a 15% average. You know, a lot of people debate on what the S&P will return on average, and usually their estimates somewhere come in around 7, 8, 9, 10%, usually somewhere around that mark when you reinvest your dividends. Well, this company has an average of 15, with 604 months in a row being paid out in dividends in 92 consecutive quarterly, not annual, quarterly increases, so raised every 90 days. And when you look at the dividend growth, it is even growing at a pretty steady rate considering how high the dividend yield is. A 4.5% annualized compounded dividend growth since 1994 when they went public, and they're diversified between 6,500 different properties all over the country and the United Kingdom and Puerto Rico. And they are in 49 of the 50 states with over 600 different tenants, 600 different customers, diversified between over 51 different retail and other industries. This company is so diversified, such a sustainable business model, and like this third bullet point here says, real estate is a scarce resource. Real estate, you can't make any more of it. We could talk about different products, like for example, Pepsi. They can always come out with a new product. They can always come out with a new beverage, a new snack brand. But real estate, you can't make more of it. There's only one Earth. Until Elon Musk ships us off to Mars, you know, real estate is going to be the only thing that we can use as far as a place to live because there's only one Earth out there. And guess what? Realty Income, They own a lot of it. So when it comes to real estate, Realty Income is the best stock out there, and I think it's an incredible opportunity for someone to buy and hold until the day that they die. Stock number 4. Let's go ahead and close out the Realty Income tab and look at the company that has over 60,000 products, the company that makes up about 5% of my portfolio. We're going to talk about 3M stock. And 3M is the best industrial company that you can purchase, in my opinion, because 3M has one of the best track records in the entire market with a dividend growth streak of over 60 years. You heard that right, 60 years of consecutive annual dividend raises. And guess what? It's actually due for another dividend raise here in about another month or two. But 3M is the best company out there as far as the industrial sector, because usually you have a company that specializes in one section and one group of products. This company has over 60,000 products, 60,000 products and growing. Just to give you an idea of how diversified and how, honestly, I hate to say it, but how random some of these products are, let me just give you an idea, just to name some off the top of my head. I know they make insulation inside of houses. I know that they make telephone poles. I know that they make some special kind of ink cartridge that only 3M can produce. I know they make just basic things like glues and tape and sticky notes and so many different other products out there that nobody even thinks about and probably doesn't even know that they're buying it from 3M. But guess what? Between their 60,000 products, a lot of them are growing, and they're coming out with new products as well every single day. And just to give you an idea, I'm definitely not going to go over all of them, but this is just the consumer sector. If you want to go to their investor relations page, you can see a lot of the products that they have, and this is their consumer section. Let's just open some of these tabs just to show you the different categories and the different brands that they have between all different sectors, between cleaning and protecting, and personal health care, and home improvement. I mean, just literally the other day, we bought some command strips for our house. That's a perfect example of something that you don't even think about and take for granted, and you buy from 3M. There's other things as well, like decorating, organizing, crafts, school supplies, office, sports and recreation, cleaning and protecting. There's so many different categories, as well as getting to the business categories as well. There's so many different things that this company produces that it's hard to even dive deep into what they actually produce. But basically, if you believe that the population is going to grow, if you believe that the United States is going to thrive, 3M is going to find a way to have some of their products be successful. And basically, as the economy grows, 3M will grow right with it. And guess what? We will always need different physical goods produced. While that will change as consumer habits change and our worldwide economic system changes as well with it, some form of physical goods will always need to be produced. And guess what? When it talks about resources, the finances, and just the branding power to produce a lot of these goods, 3M is one of the best ones set up for that. They'll be around till the day I die. I would almost guarantee it. And then stock number 5, and last but not least, the last stock on my list, you got to have a financials company in there. So we're throwing in JPMorgan, and it is one of my highest yielding stocks, as well as one of my highest targeted stocks. JPMorgan, after the recent run up, now has a dividend yield of about 3%, and I was buying the stock like crazy when it was in the high 3s and low 4% dividend yield. I was buying the stock a lot in the 90s and the low hundreds, and now it's going up back to the 120s, and I think it's got a lot of room to grow. And basically, the way I look at it is that this company is always going to be needed in the economy. Banks are needed for a functioning economy, no matter whether you like it or not, whether you like JP Morgan, you like Bank of America, you like Wells Fargo, you like any of those big names. Some form of banking, whether that's online, physical banking, whatever, banks are always, always, always going to be needed for the future if the economy is going to be able to sustain itself. And if you want exposure to the financials industry, if you want exposure to one bank and you only can pick one company, why not go with the absolute best? If you notice something across the board here, you'll notice that I like to pick the best in the industry when I'm making this list, the top 5. Pepsi, in my opinion, is the best company for food and beverages. There's always going to need to be around. Johnson & Johnson is the best company for the healthcare industry. Realty Income is the best company for real estate. And then number 4, 3M is the best company for producing physical goods for the industrial sector. And then last but not least, we have the best financials company, JPMorgan Chase. And one of the reasons why I would feel comfortable owning this company till the day that I die, I know a lot of people like to give these companies and basically just banking in general a lot of slack for what happened in 2008, 2009, and I totally get it. And who knows if something like that in the future will happen again. But when it comes to banking, JP Morgan is not only the best run bank, but I think that it is the most innovative, the most adaptive to the ever-changing environment. Like now, the big shift is having mobile banking, having online banking, where people want instant mobile payments, sending to other people and depositing checks online. And I think JPMorgan is best set up to adapt to those changing consumer trends, and that is something that they are really focused on. Now, when we look at this is just to give you a quick idea. I won't go over this in depth, take way too long, but just go ahead and pause the video if you want to look at this. This just shows you how they have such a long-term focus, and this company is stacked so well for the future for a long-term shareholder. JP Morgan is a company that I would almost never see going bankrupt. If something horrible happened with our economy, if everything shut down, maybe it's another coronavirus issue, maybe it's a 2008, 2009 problem like we had, or the dot-com bubble, or pretty much any other problems we have in the past with wars and economic issues and whatever, JP Morgan would be the last company to go bankrupt at all of these because they're so large, they're so dominant. Do you really think the Fed or any other forms of the financial form of the government will ever let this company go under? I highly, highly doubt it. JP Morgan is a company that I would anticipate owning till the day that I die as long as they keep up with their incredible track record, their great form of adaptability, and their excellent form of growth. But these 5 companies are the 5 companies that I would pick. And last but not least, if you want me to show you the weights that I would make for these, let's go to My Pies and let's click Only Invest in 5 Companies. The 5 companies that I would invest in are listed in this order on the target percentage weighting, and it makes up, as of today, about a 3.3% dividend yield. And these 5 companies I would be very happy owning. And you can see not only the dividend growth and the dividend yield being great, but the share price growth being great as well, up about 38% on a money weighted return over the last 5 years. But thank you guys so much for tuning in. Thank you guys for watching all the way to the end. Like I said, if you want to tune in at the very next video, these 4 charts will be updated, so go ahead and watch that. So go ahead and download that below and deposit $100 to the platform so you can get a free $10 and also do the other things as well, like check out Yada savings accounts, sign up for a mentoring call, do a credit card referral, anything you want to check out down below in the description, as well as the pie that I own with my 26 current companies. But thank you guys so much, and I'll catch you guys next time.